What happens if you lose your job after getting a property? And why do you need financial planning before you get a property? These are some things that your property agent did not tell you, and it's very important for you to be financially ready before you buy a property in Singapore. Hello everyone, welcome back. I'm Jia En, and today in my video I'll be sharing with you everything you know about financials before you get a property in Singapore. And before I start, please help me to follow my new Telegram group. It's Jia En New Launch Updates, where you can find more property updates about Singapore, and feel free to contact me if you have any questions after watching my video. So in today's video, I'll be covering an article that was from the Straits Times in May 11. So when unemployment suddenly hits, it could happen to anyone, and that's why financial planning is very important regardless you are buying a property or not. And that's why I'll be sharing with you today a summary of this article, followed by burning questions that you might have as a buyer or seller in today's market. And before you buy a property, how many months of savings should you minimally have before you consider? And can property be your emergency backup fund or like your backup plan, so that it can be a safety net when you eventually get unemployed, or it can be a safety net when you go into retirement? After sharing this, I'll also be sharing with you, if you are a buyer or seller today, what can you do after you have these savings in place. So in this article, it actually states when sudden unemployment hits, it's actually very important for you to have financial planning in place, because in this article, this lady was pregnant and suddenly she was unexpectedly laid off while being pregnant, saying that unemployment can happen to anyone in today's market. This is especially so if you're working in the technology sector, because this could happen to anyone. However, she managed to financially go through this because of her husband's salary, and her husband's salary was very stable. So it is very important for you to be financially stable before you plan ahead for your property and any investments, especially with any dependents. At that point of time when this lady was pregnant, the stress that she had from being laid off and unemployed was very huge. This article also states that it's important for you to have an emergency fund covering 6 to 12 months, because it helps to manage your funds expenses in the event that you have a sudden job loss or anything happen to your family. And you also reduce your financial anxiety, especially when you have a heavy mortgage or heavy expenses for your daily life. And that's why it's very important for you to have 6 months or at least 12 months of emergency funds and savings, depending on how much expenses you have for your daily and monthly needs. So if you do not have your emergency fund ready, you can start to count how much money do you spend per month, and depending on how much money do you spend per month, you need to times this amount times 6 or times 12 for you to have sufficient savings, so that in the event that you have unemployment or anything unfortunate happen to you or your family, you have sufficient funds for yourself and you need not be too anxiety or get into depression afterwards. Without further ado, let's move into the burning questions that you might have today. If you are unemployed, what should you do with your property, or how much months of emergency funds should you have before you get into a property investment, or whether you're investing into stocks or whatever, because these are the basic financial needs that you need to have before you do anything that is beyond your daily expenses, and these are very important. So the first question we have here is, do you have at least 12 to 18 months of savings before committing to a mortgage in a property? So when you're buying a property, apart from paying the down payment, which is very huge, around 25% of down payment plus your stamp duty, you also need to have a saving funds of at least 12 to 18 months before you commit into buying a property. This is because it gives you extra safety buffer, so that in the event that if you have any retrenchment, health issues, or you're planning for retirement, you need not feel too disturbed and your income may be disrupted at any point of time. This is something that no one expects and we will never know about it. So in the event that you're actually unemployed suddenly, you are not worried, because you have at least 12 to 18 months of savings with you, and this 1 year or 1.5 years of savings can actually run you through while you actually cover the mortgage for your property, and you're not forced to sell your house. And because of this, sometimes people buy into a house that is too huge, they are forced to have fire sale, and in the event that they have fire sale, they have negative profits, and this is like a negative loss, which will lead them to become even more stressed, because they need to sell immediately so that they have the funds to cover for whatever emergencies that they have. That's why it's very important you must have this savings before you commit. And if you still don't know how much savings that you should have before you commit to a property, feel free to engage me or talk to me so that I can give you professional advice. At least for me, I will always tell my clients to be financially prepared in terms of 12 to 18 months, because this is very important and we do not know what will happen to us after purchasing the property. The next question we have here is, can property be your emergency backup fund? Yes, this can actually be your potential. So as you are working very hard and you have a property is one option of how you can have a safety net in terms of emergency. Because when you have a property, right, it offers you the potential to rent it out as rental income, and also it provides you capital appreciation. When there's capital appreciation, when in times of need, you may also take like a short-term loan based on your capital gains for the property itself. And also, if you are fortunate enough to have 2 properties, with 1 property for you yourself and 1 property for your husband or your spouse, it also allows you to stay in 1 property and rent out the other property. Or alternatively, you can also rent it out in terms of emergency. For example, if you are fortunate enough to stay with your parents, you can stay with your parents while you rent out your place to get the rental income to tide you through the unfortunate circumstances, so that you have enough funds to get back to your feet afterwards. So having enough funds help you to tide you through and have more financial stability. And for my clients who already have 1 property, usually I also share with them the importance of having 2 properties. You might want to plan for 2 properties, because one that you are staying with very comfortably and one that you actually rent it out. Imagine having 1 rental property and this tenant help you to pay for the property all the way until 65. Imagine like you having a passive income of at least 3,000, 4,000 every single month, and you can retire comfortably overseas also. Imagine having this extra cash. It will definitely allow you to have a financial backup plan in terms of retirement or like layoff, because you have this consistent fund over here. That's why property can be your financial backup plan. So the last question I have is, should your first property be a safety net or a showpiece? Some people are asking me, hey Jia, should I buy a property that is well within my budget, or should I stretch a bit more to buy a better place or to buy a bigger size bedroom? Honestly, for this question, I will support having a safety net for your first property, because it's very important for you to be very comfortable with your first property, so that you can actually hold your property through for at least 3 years after the seller's stamp duty, and you don't need to have fire sale in terms of any financial instability or if you're actually unemployed. For a very huge property or a property in a better place, it might look nice on Instagram or it might look nice to show to your friends, but if you do not have a strong foundation, it might lead you to a downfall, because having a mortgage that is within your need is very important. So the key thing here is understand how much is your mortgage every single month. Is your mortgage 4,000, 5,000 or 6,000? How much stress can you take with this mortgage adding on to your personal lifestyle? Do you have enough funds after paying for this property, and does this actually give you to more stress after you buy the property? So financial planning is very important, because you must take into place like when this mortgage actually happens, will it add enough stress, and what happens if you are laid off suddenly, because we do not know when will unemployment happen to us. So these are the 5 golden property investments rules that I always share with my clients. If you watch my other videos, I've also shared it before. So the main thing here is to always start saving and investing as early as possible, because when you save more, you can actually have more funds for backup and also have more funds for your emergency fund. And that's why it's important for you to save more, as many as 12 to 18 months of emergency funds, and always aim to increase your net worth. So when you have too much cash with you, that's when you plan, should I actually explore more on property investment or stock investment, do something more to increase your net asset value, so that your money is working harder for you, and invest based on numbers. So we do not think just the present, we also think about the future, and that's why usually we will think about what will be the future upcoming developments and how much emergency fund that we have, because we want it to be a safe investment for you. And that's why when you actually buy a property, do think of all these factors. So in the event that when you actually lose your job, ask yourself, how many months will I take to find my next job? And these are the emergency funds that you actually really need to sustain you through this layoff or down period. So it's very important, while you invest in property, do make sure to save this 18 months of emergency funds in the event that you actually need it. So now that you've understand about the basic financials, these are what buyers and sellers can do today. For buyers, plan and pause, do not be pressured to purchase directly, because if you do not have enough funds, then you might want to hold, wait for you to have enough funds, save for 1 or 2 more years. Try to build and replenish your emergency funds, so that when you actually have unemployment or emergency needs, you can have these savings of 12 to 18 months. And when you're really not ready, try to rent first and stay with your parents. Do not commit immediately, and most importantly, work with a trusted agent and get your IPA loan assessment done with your banker, so that they can give you an accurate amount of budget for you to work on, so that you do not overwork yourself. And for sellers, unfortunately, if you're unemployed and have an emergency situation right now, avoid panic decisions. If you can, do not rush into selling, because a lot of sellers, when they do not have enough funds, they might need to rush into selling and end up they sell it at a lower price, much lower compared to your neighbors. And look at the long-term impact. When you sell at a lower price, you will not be able to get back this house, or you might not be able to buy back this house at this same price in the future. So avoid any panic decisions. If you can, because of financial stress and pressure, you might want to see, can you actually rent out your house instead and hold the property so that you can sell it at a good price. So meanwhile, maybe stay with your parents and work out the different funds that you can actually get to tide over this situation first. So with this, it actually comes to the end of my video. It's very important for you to plan for your financials, because when you're not financially ready, you might have some loss in terms of losing your deposit for your down payment, or you might need to sell it before the 3 years seller stamp duty, or you might need to sell lower than your neighbors, allowing you to cash out at a much lower profits. So it's very important for you to be financially ready, and do remember to help me like, share and subscribe this video. I'll also share with you more videos about the important things that you need to plan for before buying a property in my next few weeks. Thank you. Bye bye.